Good afternoon and welcome, everyone. It's great to see such a full room for this conversation. We are very excited to share some of the most exciting developments that we're seeing across markets, specifically in altcoin DATs. My name is Ryan Silva, partner and head of trading at Borderless. I'm joined on stage by some world-class industry experts that are going to walk us through this. And I'd like us to start the introductions with you, Mark.
Hi, thank you, Ryan, and great to be part of this event. So I'm the CEO of Tharimmune, and before that, I was a partner and COO at DRW for a number of years, and before that, at Citadel for a number of years.
Hi, my name is Hirsch. I'm a VP and Global Managing Director at Kraken. I oversee biz dev. I'm involved in corp dev and some other strategic projects. Before that, I led eToro US, brought it from 0 to close to 100 million in revenue, and eToro went public recently. And before that, I was at Samsung leading innovation strategy for Samsung North America.
Hey, I'm Scott Lawin. I'm the president of Pantera Capital Management. We're a $5.5 billion alts business focused on blockchain and crypto. Spent about 27 years before that in TradFi, both on the banking and running hedge fund businesses, and then was a founder in the Web3 space up until about a year ago.
Good afternoon, everyone. My name is Ternullo. I am the CEO of SVRN, which is a near-focused treasury company aiming to deliver infrastructure around the network. Prior to the role, I've been in venture capital the past 5 years, managing 2 venture funds. And prior to that time, ran KPMG's advisory business focused on institutional adoption of crypto as an asset class from 2018 to 21. Started off on the TradFi side at State Street, finance accounting guy by background.
That's great. So just to kick things off, we'll start with a really broad overview. We've seen this year an explosion of altcoin DATs come to market. CoinGecko has indicated just in Q3 alone, there was over 10 billion of institutional issuance. The first question for you, Mark, is really what's the driver of this institutional interest, and are there specific idiosyncratic, differentiators that have gathered this interest?
Yeah, and first, I forgot to mention, Tharimmune is the Canton DAT, so that's also, for those that aren't familiar with Tharimmune yet, hopefully you will be. But obviously, there's been an explosion of DATs. I think that's just more of a natural market phenomenon. When you see breakthrough technology evolve and emerge, then you usually see good ideas, capital, et cetera, chase after that. You look at the explosion in private markets, private credit, private equity. That's kind of the natural evolution of that. And for me, the more interesting question is about the differentiated models of DATs. It started more just of kind of a capital flywheel type transaction. And so at Tharimmune, as an example, it's not just about acquiring coin and continuing to do that. It's more about how you can have differentiated returns and get involved in different projects, which I think some will talk about. And then, for my specific DAT is more about the Canton ecosystem and how we can help evolve that infrastructure. It's early days for that blockchain and coin, so very much focused in the network and how to build out that across the ecosystem. So I think you also see, and I heard this in the previous panel a little bit, the convergence of obviously TradFi and DeFi. And I think Canton's well positioned to be right in the center of that. Like, it's happening faster than ever before, and I think it's a special time and moment for Canton.
That's great. And Scott, you've also been very involved in a lot of the altcoin DATs, Pantera. So could you talk a little bit about the institutional adoption that you're seeing there?
Yeah, so I think for better or for worse, I think our partner Cosmo Zhang coined the term DAT earlier this year. And, the first deal that we were involved with, I think the idea was, okay, what did it look like to move beyond a Bitcoin DAT of strategy and into ETH with DeFi Dev Corp? I think at the time, right, if we were having this conversation, we would have said, DATs are an interesting structure. We think that there's going to be a handful of them. I don't think at the time we anticipated what we saw over the course of the last 6 to 9 months. That said, we became sort of nexus of liquidity for a lot of these, and an early investor. We launched a couple of funds around the DAT space, and our conviction really grew and built up over time. And so I think what we see is DAT's playing a very interesting role in the ecosystem. The panel earlier today was the conversation about ETFs versus DATs, and right, very simply, you can sort of boil that down to passive management versus active management. And then as we sort of move away from Bitcoin DATs into altcoins, I think the differentiation and the role that DATs play as an active management vehicle, as a participant in kind of the token ecosystem, as a cheerleader for the protocol, actually becomes more important, and there's sort of different degrees of freedom. So we, despite, and I'm sure we'll talk a little bit about it, sort of what we've seen in terms of prices and MNAVs over the last few weeks, we're still super bullish on where the space is going.
That's terrific. And as this universe is continuing to expand, we've seen a bunch of key players play various roles. Guy, at Kraken, you've been very integrally involved in a lot of these deals as well, and you've actually been kind of part of this genesis crew of this ideation. When you're evaluating altcoin DATs in terms of a risk framework, what are the things that you look at?
Yeah, so we started our involvement in DATs with a former Krakenite, Joseph Honorati, kind of calling me one day saying, "Hey, dude, I want to be Michael Saylor for Solana." And I was like mad at myself that I didn't think about it, but it kind of blew my mind. Like I understood almost instantaneously that this would be the genesis of an industry. There was nothing like that other than actual Michael Saylor beforehand, and this was the first attempt at doing a DAT for an alt. Then you're talking January, February, our motivation was to not just pioneer something new, but also to support a Kraken alumni and support entrepreneurs that have spent time at Kraken. We actually have a second Kraken alumni and a former Pantera partner, Marco Santori, who's leading Soulmate, another DAT on Solana that's traded on NASDAQ. Now our thinking has evolved. We are not necessarily looking for multiple on investment. We're looking for strategic alignment with the company that is launching on NASDAQ. So that can be in the form of basically extending services that Kraken excels at, such as qualified custody, trading, and project management. So we have been involved or invested in more than 15 DATs so far. We're custodying north of $7 billion. For these companies, and we would continue to evolve our thinking because it's an evolving industry, but it is an industry by now. So we're very happy to see that. We're very proud that we have two alumni kind of leading companies in that space, and we will definitely do more in it.
That's terrific. Switching gears a little bit to like product design, differentiation. Sal, I want to bring you in. Congrats on launching the Near DAT. When you look beyond just the passive staking rewards, DATs are moving towards running their own validators, providing infrastructure, engaging with DeFi. Can you talk a little bit about how you're doing that and how you see that unfolding?
Yeah, happy to do that. So I think we had the benefit as we were looking at the design and build of what we're doing with Sovereign to look at the market as it evolved over time and design the active approaches that we're pursuing on the balance sheet utilization side in context of 6 months of progress and evolution in this space and the reality that these vehicles can trade both at a premium and a discount, which was something that I think many did not recognize or really deeply appreciate through the summer. So we looked at our approach in two different regards in terms of differentiation. The first was internalizing the asset management mandate and bringing the subject matter expertise in-house to drive the yield generation capabilities, both in the vanilla forms of B2B staking, participation in liquid staking tokens, and liquidity provisioning on chain. But more importantly, in the context of the options market, which for many of these alt assets has really matured over the last 2 years and looks fundamentally different than it did in even 23. And that's a space that we've leaned into, and I think many others will continue to lean into, which gives both the ability to generate cash proceeds to facilitate support on equity buybacks without selling assets off the balance sheet, but also optimizing the accumulation strategy and entry prices. And so on the kind of treasury management piece, we're running that internally. But more importantly, and the reason that I'm joined by the team that I have around me is really the second phase of this business, which is focused on the infrastructure side. So Near as a protocol has 2 different unique products. First, Near Intents, and second, Near AI. On the intent side, it's an MPC signing scheme that's embedded in the network, and we will become one of the signers within the MPC quorums that's facilitating, I think as of today, 4.7 billion in total volume and ramping virally. It's the lowest cost, fastest, easiest way to transact natively across assets. But for me, more exciting is thinking about the confidential compute side of what we're doing in the context of Near AI, where we're actually deploying NVIDIA confidential compute infrastructure coupled with Intel secure enclaves and monetizing that infrastructure in native Near. So again, I think we're fortunate that we launched when we did because we had the benefit of learning from the market, but that's how we're looking at this.
That's great. And Mark, kind of dovetailing to you, like, what does it actually take to build this operational capability, and how do you view that with Canton?
Yeah, so again, I think first is you have to build out all of that capability because that's the differentiating factor for your DAT, how you can add value to revenue other than just the coin appreciation and acquisition. And it starts with obviously the hiring team. I mean, myself, more of a TradFi guy, but I'm an operator. I have a deep expertise in kind of the financial plumbing, so the repo markets. That was where I started my career. And so you have to have kind of that know-how in order to build out that infrastructure. And like you said, you can outsource it, but you're giving away a lot of that to do, or you can build it out in-house. I think for Canton specifically, because it has a unique position to really add value and kind of rewire our financial markets today because of that unique configurable privacy element that it has. I think that just kind of expands about why the employee selection or the management team is also important because you want someone that aligns with that. And Canton may be different than others out there, and so it depends on the DAT what the product is, but the product is really the kind of coin and the ecosystem that you're supporting. And so that's what I think we're focused on is rewiring this massive market that we already have today in financial markets and kind of merge that DeFi, TradFi world.
Yeah, I think, let me just add to that. I think it's a super important point, right? And I think the way we think about the market is we're sort of at the end of what we sort of consider the genesis phase of DATs. As I said, a lot of people sort of, rushed for the door when they saw sort of, where share prices were on the break. There were, a lot of folks who spun them up with different types of narratives in terms of different partners or different, regional plays and things like that. At the end of the day, these are public companies. And running a public company requires a team and a management to address, what it means to be, compliant with the 40 Act and a regulatory environment. But it also requires a team to be able to be intelligent managers, right? Some of these DATs, many of these DATs have legacy businesses. And I think as we go into sort of phase 2 here and we see what happens, we see whether there's going to be consolidation, we see whether there's going to be continued innovation. We're still at the point where the narrative around why DATs exist, what they represent, and ultimately what the strategy is, I think is going to be increasingly important here, to sort of see which DATs are successful and which DATs have to sort of, think more strategically about how they actually get attention and ownership.
And this increasing complexity beyond Bitcoin now into altcoin DATs, Guy, at Kraken, you've developed infrastructure to handle this over years. You have hundreds, thousands of people working on this. Can you talk about how that strengthens like the moat for Kraken's ability to really identify this?
Yeah, Kraken spent more than a decade building complex capabilities such as custody and exchange, trading capabilities. These are really hard things to build. And so when someone is launching a DAT, what I've seen is that if it's a pure play DAT, you better off go and focus on telling your story, do the marketing, talk to media, talk to investors, have someone running your treasury strategy, but then externalize all the underlying core capabilities to Kraken or an asset manager, because it's very, very hard to build. I would say for a pure play DAT, I think that's kind of a winning strategy, at least to get off the ground and get to some traction. If you want to go beyond DAT, if you want to build some sort of a commercial arm for a foundation, or you want to build an infrastructure company on top of or as part of also like a capital markets flywheel, then that's a different story. Then go build some core competencies involving in executing that strategy. I think there will be, in a year's time, we will see a pure play DATs that do that, and we would see companies that go beyond DAT into something else, either infrastructure or commercializing kind of more capabilities for the foundation or for the token. And at Kraken, we would like to be very, very close partners with the pure play DATs because we have a lot to offer. And for those who want to build beyond that, we still have a lot of expertise in helping them building those capabilities until they can run on their own.
That's great. Shifting gears a little bit to liquidity, Sal. Obviously, alts have a variety of different liquidity profiles depending on which you're selecting. That extends into DATs as well, right? So we've seen in some cases liquidity profiles be less, than the underlying token. How are you thinking about this in terms of running the DAT, et cetera?
Yeah, so this is particularly relevant to us in the context of what we're doing with NEAR, in that at spot there's $200 million of daily trading volume. In our current public company, you can look at the public data on it, it's orders of magnitude smaller. I think this is an evolution and maturity curve that organizations will go through over time, and really leans into what we're doing on the second phase of the business and building out the infrastructure side and some of the partnerships that we're working on in that regard. But ultimately, that's a decision in terms of the exposure pattern that retail investors are taking. If you're really long fundamental oriented and we build the liquidity profile of the public vehicle, it may offer basically a wrapper around these yield characteristics, hedging characteristics for the underlying asset, and exposure to the infrastructure of the business. But it certainly is an interesting dynamic to look at liquidity profiles beyond Bitcoin, ETH, and Solana in the public vehicle context relative to underlying spot markets.
Yeah, I think it goes, there's a sort of old Wall Street saying, right, which is new products are sold, not bought. And the way to interpret that is at the end of the day, if you think about the story that, incrementally every DAT is telling, right? First it's telling a blockchain story, right? Then it's telling a token story, and then it's telling a DAT story on top of that, right? And so I do think as we think about sort of distribution and access, certainly what we've seen is being out there and telling that story, right? What the narrative is, why it's important, what the yield opportunities are, what the proper place of the particular token or protocol is as it relates to use cases. Those are the things that the market is going to have to sort of continue to lean into to convince retail brokers, retail investors, et cetera, that these are things you want to own in your portfolio.
Yeah, Mark, if I invite you into the liquidity conversation, given your background of market making, DRW, et cetera, how do you see this kind of evolving all at once? Is there a little bit of a saturation that you're seeing right now?
So I think for Canton, it's a unique situation. We actually closed on the pipe before the listing. And so I think it's a unique kind of early stages. Like we talk about, like where are we at? Obviously, it's been a big growth in DATs, but like we're in the first inning, top of the first. Like, excuse me. It's a marathon, and so I think from a liquidity side, that's going to kind of evolve over time. Like the listing happened started this week, and I think you're seeing some price discovery, if you will, on that. It just started trading, and so you have a large ecosystem that are kind of getting liquidity, testing the market, price discovery that you would expect for a first listing. And I think, as Sal mentioned, like it's unique to see how that will transform into the underlying stock, and as volume picks up and hopefully continues to pick up and more activity, that will converge as well. But that's early days, and that's how I look at it. Where this isn't a sprint, this is a marathon, and I think it's about how you position the DAT and how you evolve that to have really a differentiated value add.
Yeah, it really is about price discovery right now with everything coming online all at once. Almost a deluge of this, right? Scott, given your macro background, and you've seen some pretty significant price moves in all asset markets in your career, but like specifically for this, when you see pretty sharp expansions and contractions in MNAV, how do institutional participants kind of think about that in terms of their portfolio, or is this just a gateway into alts in general?
Yeah, I mean, I think it's distributed across different types of investors, right? If you take a look at the investors who participated significantly in this generation phase, you certainly had some investors who are thinking about this as a new segment of the market that they want to own. They're thinking about this as it relates to the underlying technicals, and how MNAV is managed and tokens per share, et cetera. But frankly, you also have a lot of investors who are in it for a quick trade, right? And again, the ecosystem of how these deals come together is you have a small group of underwriters who are incentivized to bring transactions to market. You have a group of sponsors who see an opportunity to either capitalize on the opportunity in the market or sort of differentiate themselves, et cetera. And so, like anything, there's going to be some investors who are in it for the long haul and now see these as real opportunities, right, to be buying. And so they might have been initial buyers and now they're buying more. You'll see some investors who sort of got in, either made some money or got burned, and they probably won't touch it again, right? And then it goes back to this sort of broader adoption story. As we kind of see where this phase 2 is and where the market settles out, you'll start to have more of the more patient capital that looks at this as part of an overall portfolio trade.
Right. And Guy, you were very early in this theme, right? It seemed to have gone from not a theme at all to euphoria to perhaps bear market territory, all in the span of 6 to 8 months. Where do you think we kind of are in this?
So there's definitely now, I would say, a semi-bearish sentiment on crypto overall, and DATs in particular. I think from what we've done, I think so far, BMNR and Soulmate are the only ones trading above pipe price. So you got to be patient. We have to see like where things are heading, how the market will react to these companies, how these companies will build themselves. Kraken is definitely a kind of a patient capital type of play. We're not kind of a toxic hedge funds coming in just to pump and dump the stock, which I think is really critical as you're building a company to pay attention to who you bring on board as your like initial investors and make sure that they are with you for the long haul. I don't know about like forward-looking predictions is very, very risky, but I would say that this industry is here to stay. I believe that we would see more tokens actually going to the public markets and bypass the foundation altogether and let the markets kind of do price discovery. And that will be the entity doing the commercialization of the token from the get-go. I see a lot more innovation coming. This is here to stay. But in terms of what shape will it have, I don't know yet. It's just an evolving industry.
It is evolving. I mean, I guess that really hits on the Canton point too. Can you talk, Mark, about the depth and breadth of participation by partners and investors?
Yeah, I mean, it starts obviously institutional adoption. You look at who's participated in the DA fundraise. You can look at who's on the board of the foundation. You can see the participation in the pipe from last week. It has some real institutional backing, and so that's part of the ecosystem, the community that we're building. And I think the other differentiating factor is, it's not about like, potential or test trades. You're actually seeing real world transactions go on. Like the repo market, you're seeing 6 trillion a month go on that. And I think just digging on that a little bit deeper, and I know there was a panel earlier this morning that talked about it, it's adding economic value. It's not about a momentum trade of like a coin appreciated, a pump and dump or anything like that. It's adding actually economic value to the repo market, and it's differentiating it because it's not just making it more efficient, it's unlocking the capability of intraday repo that didn't exist before. So leveraging the technology to really add value, and you think about all the talk of tokenization, 24/7 trading, all of that, that is where we feel very strongly Canton is an L1 that's positioned because of its configurable privacy, which is a key component to our financial markets today, and also the tokenomics, which I think is a unique structure about how it's structured versus just straight inflationary. And our markets are massive. Like the treasury market alone is massive. We have 30 trillion, I think, outstanding debt, and maybe more after today. But it just keeps growing, and you need to have tools to be able to manage those in a more efficient way. So using, digital asset rails in TradFi, and I think, Canton's well positioned to take that.
That's great. Yeah. So we only have a few minutes left, but Sal, if you could give us your maybe 12-month forecast here of things that are going to differentiate successful DATs versus not successful DATs. What are some of the key points that you're looking at kind of down the road?
Yeah, I mean, I think a lot of this actually builds on what Guy was describing and kind of the flavors and forms that these vehicles exist. We're obviously very much in the latter category of that, very much focused on building a network-aligned business that powers a very unique and candidly, in my view, underappreciated technology and near protocol in the market today. And obviously a view that's been informed investing across 12 different layer one ecosystems over the past 7 years and building on them. But I think ultimately at the end of the day, where we sit in the metric that matters on an MNAV basis is a measurement of both the management team's execution and ability to communicate and engage public market investors, both retail and institutional, over time. And ultimately, when we zoom out 12 to 18 months, like the measurement of those factors will drive, obviously alongside the underlying asset, how these things are valued on the public side. So we're excited for that. We like having the ball in our court, and we'll continue to execute.
That's great. Scott, anything next 12 months outlook?
No, listen, I agree with Ryan on differentiation. I guess I would say next 12 months, consolidation, innovation, and distribution, right? I think those are going to be the three themes for the next year ahead.
Guy, closing comments?
Yeah, so I think we're going to see pre-TGE projects come into the public markets and asking the public markets to price the token. I think that will be a really interesting development. I also feel we are going to see kind of Wall Street becoming a bit more comfortable with on-chain strategies and yield strategies on-chain, and people be more educated about the whole concept of what is being built as part of just a general future of financial services moving on-chain. This is just a part of the puzzle of eventually having everything going on-chain. One last thing, Kraken did a play called X stocks, which is tokenizing equities on-chain. So what we had, for example, with DFDV it's a DAT on NASDAQ, but then Kraken tokenized the stock, and it's available in the form of a token on-chain. This is just like par for the course as part of like moving financial services on-chain.
That's great. Mark?
So I agree with pretty much everything everyone else just said, but I think you're going to see continue to move things over to on-chain. That's just it. From a regulatory perspective, there's definitely some tailwinds behind that. They want to see more of that. It reduces risk, systematic risk. Like think about 2008. That was a counterparty credit risk. You don't know what they have on their balance sheet. If it's on-chain, you have the ability to see more of that transparency. I think that's what we're going to continue to see. I also do think you're going to see some consolidation amongst some of the DATs. Those that are going to add value and for their kind of ecosystem that will probably be some consolidation. And one thing is certain about this industry is it's going to continue to innovate. Every day is going to be a different challenge, and we're going to come up with solutions to those problems.
Yeah, continued innovation, continued growth, and it's an exciting time. So please join me in thanking the panel for the participation today.